we just kick off with the international scene? You say that's where most of the drivers in soft commodities are.
Yes, thank you very much for the invite. Certainly the Russian wheat scenario is driving international commodity prices at the moment. The drought that they had there, as well as fires, has really caused a big move in commodity prices. There's also been a ban on wheat from there, which has had a massive effect. On top of that, the new plantings are being affected by drought at the moment, which is a big concern. The region in a whole has had a problem. The Ukraine has got 8 million tonne less grain production than normal. So certainly the wheat scenario affecting the world market.
And maize being the most important commodity in South Africa here, what are the trends on maize at the moment?
Well, we're finding that because of the lack of wheat into the feed market, the US demand for maize has grown substantially. On top of that, the yields that they're expecting from US maize is lower than what the USDA have been predicting. So we're foreseeing there that prices will remain relatively firm. They've moved up to $5 a bushel, which is a significant level. And China, which is a significant buyer of world maize, is also not having a fantastic crop at the moment.
And the other commodity, I mean, wheat in this country, you've mentioned the outside drivers here. Well, what is happening with prices here?
Yeah, certainly South Africa is import parity driven on wheat because our majority of wheat usage is imports. So that is directly affecting the domestic wheat price as well.
And the other crops like soybeans and sunseeds, there's often the ones that we don't talk about very much.
The US has had a bumper crop as far as soybeans are concerned, but there is some concern about South American weather at the moment, and that region is the biggest soybean producer in the world. So that's certainly keeping prices firm, as well as the fact that soybeans have to keep trend with other grains from a price point of view to compete for hectares or acres. And so we're seeing that price also remaining relatively firm.
And sunseeds?
Sunseeds, if we look at the South African scenario, sunseeds supply has certainly been lower than demand this year, and one can see that with the prices that have firmed dramatically. So, and for next season, we expect to see quite a nice strong swing from maize to sunseed and soybeans because of the firm prices on those commodities.
So if someone had a bit of spare cash and could invest in these things, where would you be saying that would be a good place to take advantage of prices in soft commodities?
I think we've already seen a dramatic run on the market. I think the weather situation in Russia was a bit unexpected, so we've already seen the majority of that run, but generally prices still remain relatively firm. So maize prices are also expected to go up. From a domestic maize price point of view, we are lagging behind international prices, and the crop that we have in excess of approximately 3.5 million tonnes carrying to next year remains that's the only damper as far as prices are concerned. Export demand is quite low, mainly due to good crops in the other Southern African region and countries, and then the fact that it's been so difficult to get export permits for maize out of South Africa.